Thank you.
It, it's recording now, so um going to share my screen with you. Okay, so you should be able to see it. Can you see the chart?
Yeah.
Okay, great. So this is the reverse Chande momentum oscillator. I'm not even really sure if I'm pronouncing that correctly, but I've found this to be quite useful for identifying potential trend changes. This is on the weekly time frame, and I actually just started looking at the weekly last night. I've been looking at the 2 week, but
Mhm.
like when you get to these values that are quite high, it's a little bit like RSI. Um, RSI is just the rate of change of price. I don't know what the mathematical formula is for this one, but it must be
Mhm.
something similar to RSI. So this typically indicates the direction that price is going, and I think it has something to do with the rate of change as well. You can see here for the weekly, this was green, and you can see where this is moving kind of like in a concave up sort of way, and then it transitions over to concave down. This is the signal line, and then when it goes red, that's usually a little bit more on the bearish side, but this was more of a fake out. And then when it gets down here, you can see we have a clear downtrend that's been in place since roughly, March. But the signal line didn't turn red until April. So the peak value occurred on the weekly in December. And I don't know, I kind of think of this as a little bit as like return on investment from like some kind of major
Mhm.
bottom. So like I would say the major bottom is like right here on price momentum. Even though the actual bottom was in December, this was a bigger rate of change down into the bottom, as you can kind of see here. So it's a little bit like RSI,
Mhm.
a very similar kind of concept. In fact, if we pull up an RSI indicator, I personally like to use the Snabble RSI. It uses exponential moving averages instead of simple moving averages. You can see the data is very similar, right? Almost looks the same. So I think the reverse Chande momentum oscillator is similar in a lot of ways to the Snabble RSI. Has to do with the rate of change of price. And so what I've noticed recently on the Snabble RSI is inverse head and shoulders pattern potentially forming. And so if I draw here, I can see a shoulder,
Mhm.
head, and this is potentially a shoulder. Typically, when we get these kind of formation, it's very bullish. And something bullish for this indicator is going to be bullish for price. So what this would seem to suggest, as of right now, if this shoulder confirms, there's a high probability of upside coming. That's the rally into rate cuts that I've been talking about as being something I consider likely. Of course, we have no way of knowing any of this, but like for certain, but I mean, all you can do is play the probabilities. And so if you look at the reverse Chande momentum oscillator, it looks similar to what you see down here. So again, I don't know the
Mhm.
mathematical formula for the RCMO, but um, I imagine it's relying on exponential moving averages in a similar way to the Snabble RSI. Because with traditional RSI, um, let's see, I don't use it that often, but I have a combined indicator that uses both. It's just not for me exaggerated enough for me to clearly see like what's going on here. I can see stochastic, which is the second derivative or the rate of change of the rate of change. So this white thing is the rate of change of price, and then the blue and the orange represent the rate of change of the rate of change, the rate of change of the white line. So I mean I think RSI is a useful indicator. that can tell you, like, for instance, if RSI is moving down and stochastic's moving down, then your price is looking something like that. Um, if your RSI is moving down but your stochastic is moving up, your price is looking like that. If they're both moving up at the same time, looking like that. If RSI is moving up but stochastic's moving down, price would look like that. So that's just from calculus, basically, just some information about rates of change. So I don't usually like the traditional RSI and stochastic RSI. I don't find it quite as it's to me just not as easy to interpret maybe as something like this, the Snapple RSI or reverse Chandy. So that's kind of yeah, it's kind of like my thoughts.
Yeah, I think it looks interesting. Uh, and how do you think we could use this to like come with some decision or like
Right.
uh,
Yeah. So it's a good question. Like, oh, sorry, I didn't like use some decision about what.
for example, if we see that it's getting in the red side, we sell or
I'm
or
not really.
it's not really used for this
Yeah.
kind of things.
I mean, I don't make too many moves in the market, especially right now. I feel like, you and
Mhm.
I have talked on DMs about de-risking potentially because I put myself in a very risky position, um, more so than I probably should have by far. But I think if you're swing trading, sure, these could be part of indicators that could tell you maybe buy and sell signals. Like if you're up here, for instance, this is a clear
Mhm.
sell zone to me, right? And if we
Mhm.
go back and look, I mean, what times did this correspond to? March of 2024, December 2023. Anytime you get above this 80 line, right, that's pretty significant in my opinion.
Mhm.
So, and you see this head and shoulders pattern. And once we broke below the neckline, right, we started heading down. There was a pretty high probability that was going to be pretty major sell off. So this is where I think around this time, somewhere around here is where I decided to sell everything. Um,
Mhm.
but my major weakness sometimes is just second guessing myself afterwards. And so what I'm seeing right now, like I said, is this looks like there's a high probability of going up is of the reverse head and shoulders pattern, the opposite of this. So, and just also another observation is that we don't usually reach levels. This is again on the weekly time frame, this low very
Mhm.
often. So the last time we reached a level this low on 20 on the Snabble RSI was September 2023, and then before that it looks like June of 2022. I mean, we went lower. It's kind of crazy to think, well, why did we go lower in June of 2022 than we did in December of 2022? Because this is where the market's bottom was. And this has to do again with the rate of change, not necessarily the price value. So the same with upside. Like we hit a top here in January, but that wasn't like Bitcoin wasn't at an all-time high in January. It's just the rate of
Mhm.
change was at its strongest at that point. And then of course we had like a double top on the RSI that sent us into this downtrend that finally reached a significant bottom in, oh, this is January of 2023. This was a recovery, not January of 2024. Yeah, so January 2023, April 2023, coming out of the bear market. And then we had that August, September um, weakness. And then this just massive rally, December 2023. This is when altcoins were starting to go crazy. And then we had a double top and also a head and shoulders, very, very bearish formation here once this happens. So yeah, I mean, how do you trade something like this? I think like it just this indicator alone is not enough, right? You want to see a lot of, this is why I said I'll probably do a video on this and probably be some overlap in what I'm talking to you about. But I would look at other indicators beyond this to really get a feel for what might be going on and what your best move might be. It is a tricky environment. Like one thing, I don't know how this candle is going to close, but right now things are not going so well on the daily, right? Initially, this candle looked like a bullish hammer candle. It was
Yeah.
this open region was a little bit higher, right? So there were the upwick wasn't as strong as it is now. As you and I are talking, Bitcoin has been dumping. Um,
Yeah.
you could see if you go to a daily time frame. I like to use these moving averages, these HMAs. To me, they're a lot more useful than the SMAs for just more current data analysis. Yeah,
But
looks like
is there any price that it should close weekly? Yeah, so that it's a good price to close,
well, I
or
mean, at this
based on
point,
some.
yeah. So today will be the weekly close, right? So I think it's
Yeah.
today. I don't know the exact time that it closes, but I'm trying to go back to the weekly time frame. It's freezing on me.
I did this like purchase on BTC and Arrow recently
Yeah,
because yeah, it was really. I think the sentiment was like really bad, and also RSI was quite low, and I checked a few things and so on. And I thought maybe it's a good idea to add there, yeah. But of course, that's more like medium, short to medium term, and let's see. Maybe I will, if it goes to 70, I will sell, but I don't know if it will go
yeah.
or I
So I
will
don't know.
try.
Yeah, I mean, this right now is a downtrend until proven otherwise. If I pull up Heikin-Ashi candles, this is a pretty ugly candle right here, but it's very indecisive. You have down and then up, and then down and then up. But um,
Mhm.
this is the death cross that is coming potentially. Now, of course, it looked like it was coming here too, back in around October, and it never happened. So there's always that possibility too that the death cross doesn't happen. I mean, you would look at a lower time frame to try to see if it's happening on maybe something lower, like if we were in a daily, and you can see that a death cross on the daily, oops, looks pretty likely to happen, but it's hard to tell, right? If we can get above this 100 day, the white is the 100 day. You can just see right here. The white is the
Yeah.
100 day, the red is the 200 day, and the blue is the 50 day. And I could even turn on a 20 day if I wanted to. And so
Mm.
it looks like we faced 4 rejections. This is our 4th rejection off the 100 day. So maybe we go back down to somewhere around here and test that moving average. So that could be like 57 something. If that doesn't hold, then we're probably in trouble here. But if that holds and we can bounce, maybe we get another shot at this. What I wanted to talk about too is like the rate cuts. If we go to like the S&P or even Bitcoin, well, we're in Bitcoin. Let's just go to the weekly time frame again. I want to look at rate cuts from 2019. I think the rate cuts in 2019 were in July, if I remember correctly. Yeah, look at how the market rallied into rate cuts. There was a little
Mhm.
bit of a weakness here in June, but then they rallied in a week into rate cuts, went sideways, and then just really started dumping. Like if I pull up Let's see, I already have enough. Federal funds rate, it should be on here somewhere. Yeah, Fed funds, here it is. See what the market did, rallied right into the first cut.
Yeah.
That's, of course, it was rallying the entire time. We go to where we are right now. The market rallied while interest rates were sideways at this higher percentage. And they're not rallying now, but will it rally into the cuts? I mean, we still have time. We still have a month. If we look at the stock market, that's where we can get some clues about what might happen, except the stock market, of course, is less volatile than the crypto market. I mean, it's already dumping and the rates haven't even been cut yet. Will this turn around? Who knows? I haven't really studied the stock market as in detail. We could look at, I mean, the RSI is getting pretty low on the weekly. So who knows? Anything can happen. But if we look at all we can do is really look at the past. And in 2019, here's your interest rates kind of elevated. The market was rallying. The market also continued rallying on cuts, whereas Bitcoin was dumping. Bitcoin was dumping,
Yeah.
stock market was pumping. So then they were held steady again, and only on the last few rate cuts, that's when you really saw the major drop. But these rate cuts were put in place because of COVID and because the lockdowns. So if we go back to a previous time, I mean, this is really all we can do. You can see here, 2012, actually, even there were some, well, this is tiny. The rates were low here. Let's go. It's pretty insignificant. I'll go to 2007, 2006. Yeah, right here.
Yeah.
The market rallied right into rate cuts. First rate cut happened. Let's see, this was June 2007. I don't know exactly what the FOMC meetings were at the time. There was a little bit of a dump on the first rate cut, and then a double top, right? So, and then the market just absolutely got flushed out.
That was an all-time high, or just?
Yeah, this is an all-time high. So this is an all-time high. Now Bitcoin wasn't around, so it's really hard to say exactly what Bitcoin would have done. We could look at something a little more risky, the Russell 2000, see kind of what it did. I think it did pretty much something very similar to what the S&P did. Let's go back. This is the difficulty, is that Bitcoin's only been through one recession, and it was very, very short. So it's hard to know exactly what Bitcoin will do, but we do know Bitcoin is more risky than the S&P. So this is a Russell 2000. And you can see that the Russell 2000, and these are low cap stocks, was actually kind of rallying as interest rates went up, right? And then interest rates went flat, and they're actually at pretty similar levels to where they are today. This is back in 2007. Look, it rallied right into rate cuts. And then there was like for the Russell 2000, like a dead cat bounce. Notice how this is like a lower high. And then the floor this almost looks like how the 2022 bear market started, right? And you get this like rising wedge and then capitulation. And it's only when the rates are low, in this case near zero, which were historic lows, that the market really started to rally in a big way. As you can see, it just took off from there until 2016. There was a scare, and this happened in the crypto markets too. There was also a scare in the crypto market in 2016. I think there was like a 40% drop or something like that. Anyways, these rates were super low. They're not really worth looking at this point. But this is an example of rallying into rate cuts.
Mhm.
So if we go to
Yeah.
the right here, this is hard to figure out exactly how to scale this. This is the .com recession. So this is again, these are risk assets. These are highly risky. This is the Russell 2000. Um, I've tried to overlay the S&P with the Russell 2000 before on TradingView, and it didn't really work out very well. It was hard to really see the differences, but um, you can see with the Russell 2000, the market peaked while rates were rising in March of
Mhm.
2000, and there was a lot of instability while rates were flat. But there were these rallies that would take us to like lower highs. So this is like kind of like a slow bleed. And then when rate cuts happened, there was actually, it looks like, let me put the crosshairs on. This is your rate cut right here. There's your first rate. Your first real rate cut looks like November, maybe even here, maybe even September, October 2000. And this was an election year. This was George Bush.
Yeah.
Market didn't care. It just, look at the market. This is of course small cap stocks. These are like the altcoins of the stock market. Um, you got a rally into the November, into the election or rate cuts, but then right afterwards, just choppy, and then flesh out. I mean, this is like nearly a year later, September. Another, it just horrible. This must have been horrible to go through. And then final capitulation, October, double bottom, and then very bullish from there. So we really don't know how Bitcoin is going to behave. But I think it would behave more like the Russell 2000 than it would like the S&P, just because it's a much more risky asset. So it's really hard to say. I mean, all we can do is look at history. There was also rate cuts here, I think, in the 90s. This was, I think, the Gulf War recession, a very brief recession right here. Market rallied into rate cuts and rallied
Mhm.
afterwards a little bit too. Interest rates were at like maybe 10%. They got cut a little bit. Market kept rallying. Um, and then once they had the next cut, market started to roll over. And then when we started to get closer and closer to the final cuts, the market bottomed. And I think Bitcoin could do something like this, where rate cuts start to maybe weaken Bitcoin. Maybe initially it might rally. I don't know. I really just don't know. But then afterwards, maybe Bitcoin doesn't have to wait for the floor. Because see how the Russell 2000 didn't wait for the floor and it started rallying. I don't know. Um, I just think it's dangerous to assume, like, let's see, the Russell 2000 right now, in this environment, it's dangerous to assume that it has to rally. It doesn't have to do anything. But see if I can expand this. Yeah, I don't know. Um, so the Russell 2000 from March of 2020 rallied very hard while rates were flat, which makes sense, right? Because people, well, let me put my camera back on. People are going to be more likely to spend money when money's cheaper to borrow. And then it had like a distribution phase throughout, it looks like all of 2021. I wonder how much of this had to do um, with crypto. I have no idea. Maybe nothing. And then market started dumping on the rates going up. Rates are flat. Now the question is, this looks like a rising wedge to me. So are we about to experience another dump, or is this going to pump into rate cuts and then dump afterwards? I don't know. But I think you can find clues as to what Bitcoin might do off of something like this, which is the riskiest part of the stock market. This looks like a bearish. I mean, this is it. This here looks kind of bullish, but overall looks kind of bearish to me. I guess we could look at the technicals. Very hard to read. Just mostly sideways and up. This very slow grind upward usually resolves to the downside, but I guess we'll see. I don't know. I don't know. I don't really spend a lot of time looking at this. So going back to Bitcoin, this of course is the question on everybody's. Oh, this is the wrong Bitcoin. Pull up the index. Question on everybody's mind: what's going to happen here? You can see. All you can see is this history, and that's really it. So it's hard to know. But
Yeah.
again, you've seen evidence that the S&P can rally into rate cuts. The Russell 2000 seemed, then only have data for the Russell 2000 going back to the late 1980s. So to go back further than that, we have to look at the S&P. And I did do that, I think, in one of my videos, looked at like going back to like the 1950s, but things are different now, like in a lot of ways. So I don't know if it makes a lot of sense to compare data all the way back to the 50s. But yeah, I don't know. I mean, this, I guess a point for the bulls is that this formation right here is like a cup and handle. And so here's your cup, and then this potentially could turn into a handle. And so, see what weekly RSI. Yeah, that was what we were looking at earlier. It does look bullish right now. So Bitcoin could do what it did in 2019, which is surprise us and have a rally at maybe the end of this month into September. And maybe on the first rate cut, we would see something like this. I don't know, or maybe Bitcoin rallies a little bit more after that and then rolls over. But you can see that if you look at the Russell 2000 in the stock market, I don't really see too many instances where the market would rally in a sustainable way after rate cuts. It usually dumps. And if it doesn't dump right away, it will dump shortly after, right? So it could, like, who knows, we could have a final leg of a bull run and then dump in Q2 of 2025, and that could be the start of a bear market. I really have no way of knowing that, but what has historically happened with the S&P, at least, is that once that rate cut happens, it would rally into it and then dump out for quite a while, sometimes even up to several years. So has the recession already begun? Certainly, I don't think it began anytime during here. At least, that doesn't make any sense. But maybe the recession began because the SOM rule sometimes, like it was mentioned in the Coin Bureau video that you showed me, the SOM rule can trigger after a recession has already began. But what is a recession? That is dependent on it being called by subjective factors like 2 quarters of declining GDP, unemployment rate over 4%, things like that. So yeah, I mean, this has just been a very difficult market because it's really hard to know exactly what is going to happen. Nobody knows for sure. And then the other thing that's different this time that I was talking about earlier was the money supply. what happens to this? Like if you look at the past, probably want to look at this maybe on a monthly scale. Oh, maybe I can't. I guess it forces me into a weekly. Okay, so we have data going back to the 1950s. Let me do a auto on this. I can fit all that. Okay, so that's the money supply since the 1950s. And these are the interest rates. And you can see the interest rates in the 80s were up near 20%. Money supply has never had this happen in its history. Never. You can look throughout the whole entire history of USM2, and there was never a rate of change like this, where we went from, what was it, like 15.5 trillion to 22 trillion, and now we're sitting around, looks like around 20.8 trillion. So the money supply has curled back up again right before rate cuts. I haven't actually studied this, so I don't really, what we could do is do a correlation study. Let's see if it'll let me do that. So USM2 with FFR. I might have to type it in, federal funds rate. This would be interesting. I'm going to close these windows. I'll just X that out. No, I'll close it out actually. Let's just close it. It's fine. So this, what you're seeing down below, this may look a little complicated, but it is a reflection, I think, this is a reflection of how tightly correlated moves in the money supply are with the money supply are with changes to the federal funds rate. So, for instance, if you see values up here near 1, that means that whatever the federal funds rate is doing, the money supply is doing the same thing. So like right here, federal funds rate was flat, meaning the money supply was more or less flat at that time. But when you get down into these regions, this looks like the recession regions, you would have the money supply going up potentially. I actually don't know what was happening in that 2008. Let's look and see what was happening with the money supply. Okay, let me get the crosshairs out. So there was like a really almost perfect correlation from like June of 2005 all the way through about September of 2006. And this was a really good time for the economy. It was a bull market. Money supply was going up, and we had just reached, look at that, we had just reached the maximum value of the federal funds rate at that time. The correlation started to go down, meaning that the federal funds were being cut, as you can see, but money supply was continuing to go up. So this shows you, this is one example where just because there's more liquidity in circulation does not mean that the market has to be bullish. That was the Great Recession.
What was happening with the markets at that time? They were dumping, or?
Yeah, they were dumping very heavily. If we pull up the go back to 2008. This was happening. Okay, So what that shows is that even though money supply might be going up,
Mhm.
the federal funds rate being cut, which of course does stimulate money supply, it was just too late. Too much damage had been done. So we don't have any way of knowing if something like this is going to happen. It's impossible to know that. But we know that history shows it has happened before with the stock market. And imagine if Bitcoin had been around during this time. I mean, the stock market experienced, let's see, the all-time high, we'll just say was here. That was a 50, we'll still say a 57% drop in the stock market. Bitcoin would have been absolutely destroyed. I think Bitcoin would have dropped probably 80 or 90% at least on a 60% stock market correction. It's hard to really know how severe of a correction this one's going to be. What I'm looking for is to see how next week's candle looks and maybe the week after that, because is this going to be a higher low, which is bullish, or are we going to take out this lower low from April? Because if we take out this low in the stock market, obviously that's bearish. And then maybe what we would see is a head and shoulders formation, potentially, with this being the neckline that could form, setting the stock market much lower and maybe even taking out this low. That would be the hard landing scenario. And who knows how low it could go. I doubt it would go as low as COVID, but maybe 3,000 could be a place where the stock market stops bleeding. We could see, and then what kind of drop would that be? I mean, so far, people are calling this a recession, but is this really a recession? Um, I mean, the stock market's dropped 10%. That's not a, in my opinion, that's not a recession, at least for the stock market. Like, in fact, just like in 2019, the stock market has been pumping while Bitcoin has been dumping. So this would be a good counter argument that we're not even in a recession yet. This does not, I mean, maybe, maybe you want to call all this a recession right here, but even that, I mean, we did meet the criteria in 2022 for being, for we had 2 consecutive quarters of negative GDP, right? I think this is what they were talking about with Coin Bureau. Um, Let me stretch this out. $27% drop. I mean, that's a decent drop, but then we just rallied like crazy. We rallied while rates were rising. So if history is any indication, it means the recession probably hasn't even started yet. I will acknowledge the possibility of it, but this doesn't look like something that would happen during a recession. And what kind of drop could we be in for? Well, you have to look at past recessions. In the great financial crisis, there was a 57% drop. Let's look at .com, because those are the two most recent. We know diminishing volatility will mean that we probably won't drop as hard as we have in the past. But in .com, we dropped 50%. What if, we go back a little further to the Gulf War recession? I think this one right here, this was a very minor one. I don't even know if this was a technical recession or not. It's like only 20%, probably not even really much of this. You have this drop in the 80s. This was a pretty big drop. But notice that the federal funds rate wasn't really doing much here, like it had, it does during when the Fed cuts rates from a top, like a high top like this, things can get pretty bad. 70s, there were some pretty huge drops. Late 70s recessions, the Nixon recessions. This one was pretty bad. about a 50% drop. Well, we've seen several of these 50% drops. Those are usually the pretty major ones. 37% drop. So hard to know exactly what kind of drop that we would have or where it would end up. Could end up maybe retesting the lows from 2022. That'd be like a 33% drop. This would be a 38% drop. If we get a 50% drop, that would put us close to the COVID lows. So, history says that when the S&P rallies into rate cuts, it usually does not end well.
Mhm.
If the S&P starts to drop more than it already is dropping, like if the S&P doesn't get a bounce here, and even if it does get a bounce and it fails to sustain any kind of rally, rate cuts happen and the S&P goes down, Bitcoin's going to go down too. There's no way the S&P drops and Bitcoin doesn't drop. So that's the risk we take right now, is that uncertainty.
And in most of the cases when these rate cuts were happening, we had rallies or not. So
Yeah, I think with the S&P we had rallies. Yeah.
Mhm.
Bitcoin, I think, also rallied last time in 2019 into rate cuts.
Mhm.
So maybe that's the thing, is I don't know what is Bitcoin going to behave like. We just don't have enough data to know that. But yeah, I mean, if you go back with the S&P, we can just turn on monthly candles to simplify this. I'll turn off the Gaussian channel. Rally into rate cuts, dump with rate cuts, right?
Mhm.
Rally into rate cuts, dump with rate cuts. The 2020 recession was so short it barely even shows up here, but it's the same thing. Rally into rate cuts, dump with rate cuts.
Mhm.
The late 80s, rally into rate cuts, go sideways, dump. This one's very probably too close together, but similar kind of thing. Rally into rate cuts, dump. This was a tricky time because of inflation, right? They were trying to kill the inflation cause in the 70s. The inflation in the
Mhm.
1970s was very, very bad. Now this was maybe a different situation. This is just like things were just so broken. Rates were low, and the market was actually, looks like it was rallying into the raise of rates, and then like the Fed broke things like here really bad, right? So the market actually dumped into rate hiking, and then on rate
Mhm.
cuts it bottomed. But notice that it didn't
Mhm.
start rallying right away. Like it did, the rates had to be
Yeah.
cut for a little bit. So that's this would be a counter example, right? This in
Mhm.
the 1970s, rate hikes actually broke things down, didn't help things. Um, you can see in 1966, we had this great financial crisis. This was a soft landing because we had rate cuts and the market rallied. This is a soft landing. It only happened one time. So rates were cut, market rallied.
Okay.
But then inflation became a problem. Market rallied on the rate hikes and dumped on rate cuts. And then, I mean, this 70s was just a sideways decade. It was just, seems like once every like 30 years or so, we get one of these sideways decades. So yeah, I mean, it's really hard to say exactly what's going to happen. 1966 is the exception. This is your soft landing. Every other time's been a hard landing. So
Yeah.
will we have a hard landing or a soft landing this time? I think we're going to have a hard landing. I don't think we get a soft landing. But who knows? I'll look at the Gaussian channel to get an idea of the prevailing market momentum. And the Gaussian channel doesn't flip red on the monthly time frame very often. Now remember, this is lagging. This is like based off of the simple moving averages, the SMAs. So what you see when you see the Gaussian channel red, it's because of what's happened before, not what's happening now, right? A lot of people don't understand that. It's a standard normal distribution, right? Where the center line is the mean, and then the upper green boundary is 2 standard deviations above the mean. The lower green boundary is 2 standard deviations below the mean. So, generally speaking, Bitcoin is attracted to its Gaussian channel over time. It's going to be attracted to the mean. That's just how statistical averages work. That's why it's a mean. And so I've noticed some patterns in the past where, like, you would come down and maybe test your Gaussian channel, then you come down and kind of test it again, and in COVID we actually penetrated the channel, test it again. So I think another test is coming. But what's concerning me about the Gaussian channel, because this is a representation of prevailing market momentum over time, is it's widening. The widening is reflective of the greater volatility that's happening. And this is on a monthly time scale. What's happened in the past when that's happened? Usually some pretty big dumps. See, when it widens, dump. Dump. You can find many instances of that. So yeah, I am concerned that we're heading for a meltdown in the market. Everybody's saying, oh, it's going to be such a big bull run and it's going to be so great, but I don't think so. I don't think so. I do think there will be a bull run, but generally when you get these double top situations, like what we have here, for instance, double top, dump. This is a higher high, so that might, not be a double top, but these are on monthly scales. The 70s were full of double tops, or there was a double top in the 70s. Shouldn't say there was. I'm going to turn off the rate.
But is there any possibility that we rally now and we have again a double top maybe?
I don't know. I mean, anything's possible. It's just looking at it from this perspective, it suggests to me, sure, I mean, we could pump into rate cuts like we usually have done, but it suggests to me that a dump is more likely than a pump, like afterwards, right? For the stock market.
After rate cuts, yeah?
After rate cuts. That's what I would say is statistically or historically the most likely situation. Although there has been one exception that occurred in the 60s, right? So in the 60s, but see, I actually did a study on this too. I like to look at the Gaussian channel because it tells me about prevailing market momentum over like a decade, right? And so we can see, okay, we emerged from this sideways period back in the 30s. This was the Great Depression, and this was like an accumulation phase over like a decade, and then a bull market started. This is like a really long-term bull market, and you can see that in 1949 we tested the channel. We tested it again in 1953. We tested it again in 1958. This channel was very tight, indicating that there wasn't really a lot of volatility. But as the channel started to widen and started to kind of like, let me get a marker out, started to kind of do this. You can see we got inside the channel here in 1962. The 1966 soft landing just tested the median line, and then eventually it just broke. So I think this is like this is a pattern I've seen before where it breaks and then look, we try to get back up above it and it broke in a really big way. This is very similar to what happened in 2000 and 2008 with the great financial crisis. Um, just ignoring all the narratives, ignoring what was happening geopolitically at the time, this pattern has played out before, right? Is it playing out again? I don't know. But here it played out again. Look, this is when it played out in the great. Look how similar this looks to what happened in the 70s. Very, very similar. Whoops, I don't mean to keep drawing. So similar. Look at that. So what's going on now? Are we just in a very long bull market that's just going to keep going? I mean, when we came out of the 70s, that's what we got. We got this like long bull market that just kept going. It's possible that's what's happening here. Maybe we just come down to test the channel. Maybe it still would be a recession, but maybe we just test 4,000 or 3,900. That would be a soft landing in my mind, even if we dump like that and then just keep going up. That could happen. Hard to say, but I know that when the Gaussian channel widens like this, like I was saying, when it widens, it's generally not a good thing. It did get wide here in the 1990s. Didn't mean a thing though. We had the Gulf War recession, and it just blasted off, right? So what I've noticed is these events typically take place about once every 30 years. Here's another such event right here. That's the Great Depression. So I only have these 3 data points to go off of. Great Depression, sideways period in the market, took place about 30 years before the 1970s sideways period, which took place about 30 years before the 2000 sideways period. So if that pattern were to repeat, it would suggest that another major recession event is not really likely. And when I say major, I mean like a 50% drop. It's not really likely to happen maybe until sometime in the 2030s. So that would be sort of your good news, right? It doesn't mean that we escape a downtrend. Markets typically don't do well after rate cuts. But it would mean if we are to repeat the patterns of the past, and we have no way of knowing that, then a really major recession like this one here, or even a .com, could still be a little ways away. Maybe it's not this recession, but the one after this one that looks like this one here, or something like that. So yeah, that's all we can really do is just look at the market from all these perspectives.
Yeah, so maybe, yeah, I think now maybe we just need to create some strategy, I think, yeah.
Yeah, I mean, for myself, like what happened with me is that I got myself in a bit of a bind because before I started this channel, like a few months before I started, with Bitcoin, I was actually in a very good position. I'm not really normally somebody who takes a lot of risk, but what I did is I was following Ben back in I followed Ben from November of 2021 to November of 2023. And I think it was around here. I accumulated Bitcoin all throughout the bear market. So I was buying Bitcoin from like June of 2022 till about December of 2022. So I accumulated Bitcoin for like 6 months. And Ben was talking about a secondary scare. And he was predicting that we would have a secondary scare in early 2024.
Mhm.
And so I listened to him, and I thought to myself, because I think we were going through this period in the market at that time. So it was just kind of sideways. We had come out of the bear market. And so it was right around here, I think, what was it? It was like, yeah, like October. I think it was this week right here. Bitcoin was like around $33,000 at the time. And I ended up, and this was really foolish on my, thinking back to doing this, but I ended up selling all my Bitcoin to try to take advantage of a secondary scare and buy more Bitcoin for even lower, because Ben was talking about how Bitcoin could go down to 12,000,
Mm.
and I believed it. And well, I was wrong. And I ended up being stuck in this rally. And I was like, well, I'm not going to go buy Bitcoin now because I'm just going to be buying it at a higher price. And I felt like I had like no time to think through my strategy, because I didn't know if this was now the bull market. Like at the time, I didn't know that. Like I didn't know if we were going to have like an early bull market and just pop off straight off to like new all-time highs. But of course, everything is easier to see looking back. But I think the secondary scare that Ben was talking about, while it didn't happen when he said it would probably happen, he said right around here was going to be the second. Let's see, is that quarter? No, that's too big. He said the secondary scare was going to probably happen around here between January and March, and that we would, probably see. He did not think that we would do this, like
Yeah.
go up like that. So this caught me completely off guard. Again, it's my responsibility. I don't blame Ben for it. I was upset with Ben during this time, but I ended up talking to him about it. Anyways, I put myself in a really bad position because I sold my Bitcoin, and I had about like 2 Bitcoin at the time that I had accumulated. And so I put myself in just a place where I didn't really know what to do. And I ended up trying to find another way to make money. And because I thought we were in a bull run, which I mean, this technically is a bull run. It's just not, it's kind of like the 2019 run, very similar to 2019. You have your bear market and you rallied right afterwards. It's just more stretched out. So I think the secondary scare is right now. I think
Mhm.
we're in it. And I don't think it's over yet. So I still see more downside coming, and I really don't think that the major part of the bull run is necessarily going to materialize until 2025. Because there's a lot of reasons why I think that. I come back to like on the 2 week, and we can go back to where we started here. Let me turn off the correlation study. And I talk about this a lot on my channel, right? Is this the 2 week momentum oscillator? I think for some reason it's not letting me zoom in on it. That's weird. Oh, because I'm in drawing mode. Just drawing a lot of dots. Okay, let's remove drawings. There we go. Look at this pattern. Here's a head, shoulder, shoulder. Very nasty looking pattern. And just the fact that we got up this high kind of reminds me, like if you go to 2019, you can see we had a really nice run up, and then we got this head and shoulders pattern there. Of course, we had to come lower after that, and we did put in a technical. This was a double bottom that occurred from June of 2018. This is January of 2019, and then we just shot right up. June of 2019, July of 2019, rate cuts, boom, straight to the bottom. December 2019, attempted to come up. February 2020, put in a double bottom with a higher low, and off to the bull market we went. I don't think it'll play out exactly the same as it did here, or exactly the same as it did here. But I do think that this peak, this is kind of crazy because it's higher in price momentum than 2019, right? It's more similar to 2013 in how high it went. The price momentum from this bottom, which was very, very low, to here, just insane. We came from this bottom up here, again, very insane move from September of 2022 to February of 2024 in terms of the upward momentum. So I think, it's hard to say exactly what was going to happen, but I look at this, this is a red signal line. And you can see in the past, every single time we've gotten to this level, and this is something I've been talking about on the channel for a while, this was 2011, the signal line was red for a very long time. 2013, the signal line was red for about 6 months. 6 months of red. And then it went green again for another few months. But by then, the market had already topped in November of 2013. Here's a little dead cat bounce, and then down we went into a bear market. 2017 was a different situation. It was pretty green the whole time, just a little bit of red here. In 2016, we had a couple scares in 2016, and finally we got to this level, and there was a really long bear market. 2019, it went green and then red, and it went red for since October to April, so for like, what is that, like 7 months, and then went green again for quite a while. And then in March of 2021, it flipped red. This represented the summer lull that Ben would talk about. And then we got one last spike in 2021. It was like literally just one little spike, and then back down we went. And this pattern here looks a little bit like this pattern here. So I think we have lower to go. What I am watching for is, do we take out, and this is on a 2-week time frame, so this will take a little while to figure out, can we maintain this low on price momentum? I think there's more red to come. I don't know. There always has been. So why would this time be any different? And red doesn't mean that you can't pump, as you've seen right here. You can pump into red. It's just when you have red, the prevailing momentum is bearish. Doesn't mean you can't rally. In fact, you can even put in new all-time highs. It just means you're not going to have a sustained bull rally. You're not going to get into that like up only part of the phase. Sorry, I don't know what is happening. I'm trying to make this red. It's not behaving with me, whatever. But just picture this as being red. And then I think maybe we would see some kind of, maybe what we see into rate cuts. This is kind of what I was envisioning. And of course, this is all highly speculative. Who the heck knows? But is maybe we see a bounce like this. But I was thinking we would come back down, and maybe here, I don't think it will be October necessarily, but let's see. I'm just playing around with this. We could see some kind of dump. I just don't know how low this is going to go. That's the big unknown for me. I don't know if we're going to put in a lower low, or if we're going to hold this low. Or what we could also do, and this would be very, very surprising to me, but it could happen, is maybe we get, maybe into rate cuts, we get a surprising pump. And who knows what could happen there, and then we dump. It's hard to say. What I'm looking for right now is, this would be unusual though. This has never happened before. Doesn't mean it can't happen though, right? It's dangerous to assume something can't happen just because it hasn't happened before. But every single time we've gotten above, every time we've gotten up to like levels like this, we've had some pretty significant drops down, which means price would be going down and we'd be in a bearish trend for a little while. Not easy, right? There's no way to know, unfortunately. All we can do is just guess. I don't think this is going to be a triple top cycle though. That is a very rare thing. And this is where what I talked about in the lost cycle video. Like this phenomenon of the triple top, where this would be top, this would be like top 1, top 2, and this would be top 3. That is a very rare phenomenon that hardly ever actually plays out. So a triple top in theory is a very, very bearish formation, like the most bearish formation you can have. But I think this is more likely a cup and handle. But the question is, what is that handle going to look like, and how far is it going to go? You know, is it going to look something like that? Kind of, you know. So that would be very bullish, by the way, if this happened. We got like a nice handle. As long as we're not taking out any like major lows down here, which I don't think we will. I think that's quite unlikely. If I pull up the risk model here, you can see even the most bottom part of this band is, is around $31,000. So yeah, I don't think that's too likely. Like we have broken below it before, but I think even if you pull up like the VRVP, let's see, one last thing here. Let me take off this risk model. I'm going to draw some fibs and then I'll make an adjustment for VRVP. So let's go from 2021 down to November 2022. Slide this over. Okay, so you can see right now we're pretty much battling the 886 fib. If I pull up visible range volume profile, what you'll notice is there's a lot of volume here around, let's just call 27 to like 30K. So even if we were to somehow drop, like let's just say we drop
But
into
how is this volume calculated? Where do
I
we
think this
get
is buy
this
and sell
data?
volume. I think the VRVP
Okay.
tracks the buy and sell volume. Yeah. The yellow, I believe, is sells, and I think the blue is buy, if I remember correctly. But I like it as a visualization of areas of support and resistance. So, if we come down to like even at the 618 fib, there's going to be a struggle to go down further, right? Let me do a path tool. Let's see if we do like a path. So let's say we were to try to go back up again one last time to like close to 70,000 or something and get rejected in September. Let's just say that happened and then we came down. There probably would be a bounce somewhere around. See how we bounced at 49K? That's pretty much the 786 fib. So maybe we bounce out of November, hit resistance. This is just me making stuff up, And then look at right here. There's another 42,000. There's another VRVP area. Maybe we have like a bounce there, and then it could just be there's your final flush out, right, in July, something like that, and then the market just takes off from there. So
Yeah.
I'm using these levels to identify areas of support on the way down. They can also act as areas of resistance on the way up. And these represent percentage drops, like in 88.6 means that you dropped, I think, like 12.4%. The 0.5 would represent a 50% drop, something like that. So these are your Fibonacci levels, or not necessarily 50%, but close to that. These are your Fibonacci levels, and the VRVP to me represents kind of the line in the sand. So I don't think we're going to get below here, just because this looks like a brick wall to me. Like, how the heck are you going to get through this? And this is going back to like, data from late 2021. So we're talking like almost 3 years of data, 3 years of holding. I just find it very unlikely that we're going to breach these levels. So even if this happened, like something like this happened, it would still be macro bullish because look, if you look at this, like what has happened at that situation? Well, you have your low. Sorry, I didn't mean to use circles. I mean, I could use circles, but it would just take me a little while to set up. You have your low from here, low 1. You have your low from here, low 2. And I don't know what happened to the drawing. Well, okay. I must have hit something wrong. But anyways, you would have a series of 3 higher lows. I'll just draw like the general path again without getting into the detail of it. But what do we say? It's like, oh, I'm sorry, I'm deleting everything. Okay. Well, anyways, I don't know. I'm having some issues here. But my point is, we would have a series of 3 higher lows or 2 higher lows relative to the December 22 bottom, and not only that, but we would also come back and be testing this region here, which is the breakout region. And that's very bullish to be able to do that, to have a successful test. Because what ended up happening, it's kind of like 2019. I can see why Ben was drawing so many comparisons to it. We had our bear market bottom and then just blasted right off. That's what happened in 2019, right? Like we had our bear market bottom and then just blasted right off. And we had to have this period of consolidation, and we came back and we retested this low. We put in a higher low. COVID put in a higher low. That is very bullish. Like if you zoom out on this, just change your perspective a little bit, right? This was very bullish. So it was not fun to go through this secondary bear market. This to me looks like a secondary bear market. So you could say Bitcoin has been through a recessionary bear market before. I would argue this is it right here. If we came down into another secondary bear market to like this region, and then after this we go up, into let's say summer, fall of 2025, to me that would still be bullish because this region here is getting tested, and you're putting in a higher low, right? So the general trend is still up. It's just up over a very long time period, which is not fun to go through. So that's kind of my thoughts. That even if we do enter into a period of weakness that surprises people, I don't think it's a bad thing. As long as we put in a higher low, which I think we will. Yeah, I don't really think I have much more to say than that. So
no, I think it's a lot of information, yeah, and
yeah,
just need to see what will happen, and yeah, I think I will definitely sell this part that I bought like in upcoming weeks when I see that how it evolves. But for the other part that was there and using altcoins, I don't know what should happen with that.
Altcoins are more risky.
Yeah.
So I think what you'll see happen though, as far as altcoins are concerned, let me here. Altcoins are more risky. So altcoins are not going to do well while Bitcoin is dumping. But what you might see start to happen is a shift in Bitcoin dominance during that time. You might see ETH Bitcoin start to bottom out. I think that's actually quite likely to happen. Right now, Bitcoin dominance looks strong. especially on a 2-week time frame. On a 1 week, it doesn't look as strong, but on a 2-week time frame, it's gotten back above its 50. The 100 and 50 are approaching each other, so there is a death cross potentially coming, which means Bitcoin dominance is probably fairly close to being done with this crazy bullishness. But
And what does that mean, for example, if Bitcoin is dumping and
dominance
dominance
going
is,
down.
yeah,
Yeah, if Bitcoin's
yeah.
dumping and I think if Bitcoin dumps initially, dominance will probably go up. But it
Mhm.
could mean that we're getting near a bottom. Like, I think if dominance starts to go down, maybe we're getting near some kind of bottom. I mean, all you can really do is look back at 2019, right? Sorry, I keep drawing these lines. So look what happened in 2019. Rate cuts happened in July. Dominance went up for another 3 months, but then it put in a gravestone. I think this is a gravestone doji. Very bearish candle, even though it's green. Then dominance kind of just didn't really do a whole lot. It just kind of went sideways. And then it had its first really nasty period from December of 2019 to February of 2020. What was Bitcoin doing during that time? Actually, during this whole time, Bitcoin was bleeding. So, if I remember correctly, I think Chainlink was actually doing quite well during this period, right? And eating away at Bitcoin dominance. So, you may start to see some altcoins wake up and outperform Bitcoin once rate cuts happen. Because rate cuts are a signal to the market that more liquidity is coming. So, the
Mhm.
psychology would be people might start to feel more inclined to maybe take some risks that they're not inclined to take right now. And that might be why you start to see Bitcoin dominance struggle. Now, the death cross in Bitcoin dominance didn't happen until July of 2020, which was just a few months before Bitcoin ultimately had this crazy upside move in Bitcoin dominance. And this was because Bitcoin was pumping and Bitcoin was putting in a new all time high. So, but ultimately, what was this? What was this? This was just a double top on dominance. That spelled the end. So it's like, okay, yeah, go ahead, Bitcoin, go ahead and pump, put in a new all-time high, but you're pretty much done. You know, like you can already see the 50 is below the 100. There was a death cross. So even a pump here is probably not going to change that at this point. And then look at that. Look at that just nasty leg down in quarter 1 and quarter 2 of 2021. And we know that that was a massive altcoin season. So you have to prepare for something like that. And that's why I tell people hold some altcoins, like don't hold no altcoins, like because what if something kind of like that happens again? Where doesn't it? I mean, it kind of looks like a death cross. It's hard to tell exactly when it's going to happen, but it looks like it's probably going to happen this year. And it looks like the earliest it could possibly happen would be around September. That's the death cross. Now, the only way we get a death cross is if we see dominance struggle a little bit more, right? The whole moving average is still a lagging moving average, just like the SMA is a lagging moving average. It's just less lagging. So for the 50-week, this blue line to come down more, we do need to see some more weakness out of dominance. And right now we're not seeing that. So I don't know for sure what's going to happen. Maybe this death cross doesn't happen until December, but it doesn't really matter because the death cross will happen after Bitcoin dominance has already started dumping. So that will be what causes the death cross to happen. It's just when the death cross finally does happen, like it did here, you can probably expect that there'll be a little bit more dumping, but you're probably near a bottom. You're probably getting close to a bottom. So if the death cross were to happen in September, that would mean dominance would already start rolling over. Maybe the death cross doesn't happen until October or November. I don't know. I drew this trend line, doesn't mean even this trend line has to hold. One thing I did notice was that dominance has been kind of like doing this thing, right? Logarithmic growth, where it's growing, but it's growing more slowly. It's kind of been hugging this 50-week, or this is actually not a 50-week. Sorry, my bad. We're on a 2-week time frame. The blue is a 100-week. The orange is a 200-week because we're on a 2-week time frame. If I go to a weekly time frame, I thought it was on a weekly time frame. This is the weekly time frame. So the death cross on the weekly time frame is going to happen sooner. Let's clear the drawings out. I mean, you still have your head and shoulders, but let's see. Sorry about that. I was on the 2-week time frame, which is still relevant. It's just I was calling the moving averages by the wrong name because you have to double everything when you're on a 2-week time frame. This was 2019. Okay, so let's look at the weekly. Rate cuts happened in July. There was a golden cross. Okay, here we go. I think the psychology is still similar, but let's put on the rates, the interest rates, so I don't have to guess at where they're happening. Let's do new price scale. Okay, and let's make this white. No, it's not letting me do that. Let's try this again. I think it's probably better for me to look at this on a weekly time frame instead of a 2-week. There we go. I don't want to do white. So I already have white. Let's see. How about that color? That works. Okay. So these are the interest rates. Let's move them up. Not letting me do it for some reason. Auto fit. There we go. There's your first rate cut right here. And initially, it was very bullish for Bitcoin dominance. That's a golden cross. Golden cross because the 50-week is moving above the 100-week. But you can see right here, Bitcoin dominance topped out while rates were still going down. This was in September of 2019. So this was just 3 months after dominance, after rate cuts had started. I think this is where Ben's coming up with a September to December timeframe for when he thinks dominance might top. But it didn't mean that dominance was weak. Dominance was topping and starting to look bearish. And it had one last rally in December of 2019 into its 100-week HMA. And then that pretty much spelled the end of it right there. It just dumped. But at this time, Bitcoin itself was also dumping. Dominance was falling. And yeah, I think this is what I was talking about on the 2-week. This is where I think you saw things like Chainlink starting to show some strength. I don't remember exactly when ETH Bitcoin bottomed last cycle. I'd have to go look. But Bitcoin had its last rally for a while. Oh, wait, this is 2020. I don't even remember what Bitcoin was doing in 2020. I'm going to pull it up on here. Let's do, no. Let's do a new pane. Okay, this is Bitcoin price. What was Bitcoin doing at that time? It's logarithmic. Turn this thing off. Okay, that was a lot going on here. Bitcoin dominance. Okay, yeah. So here's the rate cuts, and Bitcoin started dropping. Right, dominance topped right here when Bitcoin was at about $10,500. But then dominance started to fall. Bitcoin was in a very slow bleed at this time, right? And it was in February 2020 that dominance got a resurgence on the COVID drop. So it's like, okay, this is kind of what you can take from this. So, like, when the rate cuts first happened, dominance initially went up for a few months. We don't know that it's guaranteed to happen this time. It may not play out exactly the same, but dominance did go up for a few more months, but it started to weaken. Like this move here towards the end was not really that impressive compared to maybe these moves. Bitcoin was dumping, but it wasn't dumping aggressively during this time. And this was a time, I think, when Ethereum was also dumping, but I believe that Chainlink was outperforming Bitcoin. I think Ethereum may have been outperforming Bitcoin at that time as well. I know Chainlink was. And then dominance dumped again to its 200 week. And this happened right up to February 2020, right before the drop, the COVID drop. COVID drop happened, dominance went up. Highly volatile, Bitcoin moved to the downside, spooked everybody, freaked everybody out. They threw all their money into Bitcoin. And then dominance went down again. Dominance kind of went sideways. For most of 2020, the market was boring during that time. Then dominance started to gradually go down right into altcoin season. Oh, no, this is not altcoin season yet. Sorry. We're almost there. Dominance started to go down, but it was a very slow path down. I mean, we're talking like 58%. The market as a whole was boring. So I think this would be kind of what Ben would have called the altcoin accumulation of a lifetime, maybe somewhere in here. I don't know. I mean, I think even in 2019, there were opportunities to get alt super cheap too. This could have also been an accumulation of a lifetime right here too. So yeah, just depends on how you want to look at it. But maybe like the last call for altcoins. And then Bitcoin dominance really took off. It put in a double top, technical to here. And this is where your major altcoin season started to materialize. Here's the first leg of it, and the second major leg straight into May. Like this move was huge for altcoins. So that move occurred, that started to occur like the rate cuts were in July of 2019. This was a year and a half later. I don't think we have to wait a year and a half necessarily to have an altcoin season. So I don't know how much of that logic you can apply to our current situation. But dominance looked a lot stronger back then than it does now. There's that too. But I think we should also realize that our altcoin seasons are probably not going to be as dramatic as they once were either. So we shouldn't expect Bitcoin dominance to fall off a cliff like anytime soon. I think it will have a move like this eventually, but I don't think it'll be as dramatic. So I just think this is why it makes sense to have some kind of altcoin exposure, because you just never know when these moves are going to happen. And there will be times, as you can see, where Bitcoin dominance just kind of goes sideways. It doesn't do a whole lot, or maybe it goes down, then comes right back up. So this is why I think like it's sensible to hold Bitcoin and Ethereum, but also to hold some altcoins, because there will be different times when altcoins will outperform Bitcoin, or and I think going back to what I said earlier, interest rate cuts are a perceived addition of liquidity into the system, even though the cuts themselves don't actually produce liquidity. What the cuts do is they kind of stimulate the economy. They stimulate borrowing. So they're not directly like bringing money into the system. There's other ways to bring money into the system. The Fed's already using some of their tricks to do that. But I mean, I think the take home message is it's just dangerous to position yourself too deterministically at any point in this market. You could just say, well, rates are high. So right now, what's probably going to make me the most money, or not the most money, but what's going to be the safest play is to have some cash on the side, because markets usually dip after rate cuts, and to make sure that I have a strong Bitcoin position, which I know that I don't have, but just speaking to what I probably should have, to have some Ethereum and to have some altcoins. And then you can make adjustments to your portfolio as needed. So if you start to feel like Bitcoin dominance has topped, that's probably a good time to start to offload some of your Bitcoin into ETH and alts. Not all of it, but some of it, because we know that Bitcoin dominance is very unlikely just to die, right? It's probably going to have a battle. And you can see here's the battle. This battle took place over the span of like a year. So from the time dominance initially topped in September of 2019, altcoins outperformed it till about August of 2020 during a very boring period in the market. And the reason why, I mean, people were accumulating alts here. Why? Because there was this higher low that was confirmed. So it was like a little bit safer to accumulate alts here than it was to accumulate alts here, for instance. Like it's safer because you're going here, we're just going down. Here, the trend is up. So it's like, this is what I talk about on this channel. Like, well, do you want to like accumulate into a downtrend or do you want to accumulate an uptrend? The truth is, it doesn't really matter. Because if you get like, I'll just use Cardano as an example from last cycle. If you bought Cardano at 10 cents, like Ben did before the drop, or you bought it at 10 cents after the recovery, you still bought it at 10 cents. Getting Cardano at 2 cents was something that Ben didn't really anticipate would happen. Honestly, he couldn't have predicted. I know he gets hard on himself for that, but like honestly, like I don't think he did anything wrong by buying Cardano at 10 cents. He still made a 30x roughly on that Cardano. So that's what I'm trying to tell people now is like, don't pass up the opportunities that you see in the market. If you see altcoins that are a good deal, grab some. Like, who cares if you grab Arrow at 40 cents and it goes to 10 cents or it goes to 20 cents or 30 cents? Like, you're still going to make a lot of money on it as long as the market resumes, as long as you get one of these phases, right? Like this phase here that happened after what Ben calls a secondary scare, or the COVID drop, or the higher low of whatever you want to call it, testing the breakout. I think there's a high chance that we roll over into something like that again. And maybe this time the higher low is like around the breakout, like around here, like around 30K. That will freak everybody out. But that could be the turning point where now we enter into another boring period like this right here before we blast off, maybe at the end of maybe sometime in 2025. I don't know. So that's just a theory. It doesn't have to hold, right? I mean, 2017, certainly that didn't happen, right? In 2017, it was just this very clean, straight move up. I don't think that that is what's going to happen here. But maybe when this bull market is over and you look back on it in like 2028 or something, it might look a little bit like 2017, stretched out, right? Because you have this drop and then you have this big pump or something. So anyways, yeah, those are my thoughts.
Yeah. A lot of information to process, yeah, for me.
Yeah.
But
I have a
was
question for you. I'm going to end our recording real quick.